Good morning, everybody. So it's Monday, May 13th. I wanted to get this analysis out to give y'all a early head start on what to look forward to in the market over the next coming days, possibly the next week or two. I've spoken about this before, where I've mentioned that the end of May, we have a lot of critical events that are coming up. So if you go over here on my Twitter feed, you'll see that I've spoken about May 22nd, we have the NVIDIA earnings coming out. Okay. We also have, if you look on the economic calendar here, we have the CPI data coming up this Wednesday. I think that's going to be a very important event. Then, of course, we have in the crypto world the Ethereum ETF decision, which I think for the most part is going to be delayed. It doesn't look like there's going to be approval for ETH. So that brings us to where price action sits today, how the market looks, how charts look. And it gives us an understanding contextually of where price is and how we need to start focusing and preparing for price movement, whether that means price is going to base out here and start moving up, or whether that means that price is going to slowly grind down and break down. So I'm going to give you guys both scenarios. First, I'm going to start off with the optimistic scenario, which is that maybe BTC and the rest of the crypto market has already bottomed, right? We've effectively created a sideways trading range here. We've hammered at this 60K level. Clearly, BTC does not want to break it. Every time it comes to it, it does have a bounce back, right? So maybe this time around, maybe this is a higher low from this low right here. And maybe we just build a base and then slowly grind out June, July, and then head higher. Okay, that's a fair argument, right? Because in BTC, we've also already had a pullback of approximately 23%, which is pretty common in bull markets, right? 20-25% pullbacks are pretty normal. And Bitcoin doesn't really need to go for super deep pullbacks, though they do happen in bull markets, meaning 30 and 40% pullbacks, but 20-25% is is a modest pullback. Now, we can also look at things like the Bitcoin ETF flows. We've seen maybe positive and negative flows on both sides, whether it's inflows for IBIT and Fidelity or GBTC, and then we also see big outflows happening on GBTC, right, on many occasions. So let's just say for the most part it's a wash, and we'll say that hey, the flows of inflows and outflows are evening out on every weekly or monthly basis. Okay, so that means that pretty strong, bullish interest, but pretty strong sellers right now too. But overall, we also know that we had a halving event around here. And we also know that generally after the halving, Bitcoin performs, pretty well and substantially well after the halving, right? I've marked this in my Discord also. I also have it on my Twitter and my Warpcast if y'all want to check it out, but let me just pull it up real quick because I think this is a pretty important foundational understanding of, you could see Bitcoin bull market correction and drawdowns. The max drawdown in different cycles, you could see in the very, very early Genesis cycle, 2011, we had a max drawdown of 49%. In the 2011 and 2013 bull market, a max drawdown of 71%. In the 2015 and 17 bull market, max drawdowns were about 36%. And then 2018 to 21 bull market, we had a max drawdown of 63%. Currently, the max drawdown that we have is close to about 20%. So for the most part, we've had the lowest max drawdown so far. If you look at the average of, let's just say, the past 4 cycles, we should be somewhere in the high 30s or, mid 40s for a drawdown of the current cycle. Okay. Again, based on 4 previous cycles, we are very, very under that general average, and we're definitely under the max drawdown average, right? So for the most part, a higher drawdown is to be expected, but not necessary. All right, let's go back to the halving, right? We generally see that Bitcoin post-halving, again, these are halving events, right, for Bitcoin. And you can see post-halving, Bitcoin performs extremely well, substantially well, especially several weeks or several months after. I would say Ethereum is kind of the same thing, right? Post-halving, Ethereum, in fact, actually performs a little bit better, quite possibly because Ethereum has been a laggard prior to Bitcoin halving, and then after the Bitcoin halving, the floodgates open for Ethereum, or just general risk on high beta behavior, where people feel like maybe a large chunk of the move of Bitcoin is done, and maybe they need to bet on Ethereum. This time around, there's another reason to bet on Ethereum, which is the potential of the Ethereum ETF, right? So we have a bunch of catalysts ahead of us, okay? So that's the general, positive outlook on the market, okay? And the positive outlook, I'm not even going to give price targets because, everybody has targets in their mind, like 100K and, 150K or whatever for Bitcoin. I honestly don't really know. I would figure we're probably going to go to 100K easy, but again, non-investment advice, right? Today's video is more so about how do we look at the market from current price action, and how do we best prepare for the coming days and coming weeks ahead, okay? Whether the price moves up or price moves down. So you're prepared, right? All right, so we've given the bullish outlook on BTC. Same thing with Ethereum, right? Ethereum, Solana. Let's just say that if the outlook is bullish and prices are bottoming out here, ETH is maybe creating this very sharp falling wedge. Falling wedges, if you're not familiar with them, can be denoted in bull markets as an extremely bullish pattern. So this falling wedge, if you were to look at this, the general way to measure this is from this pole itself, and the point of breakout, I should say we get the breakout, I don't know, next week. The point of breakout to the upside of this measured move would be approximately $5,800, right? That would be the breakout move to the upside. Now, again, that could easily happen if the Ethereum ETF decision gets the approval, or people even get a whiff of the idea of this being approved, right? So there's, again, many catalysts ahead that could be positive for that. And of course, like I said, Bitcoin inflows, they're relatively strong, right? I think there's a pretty strong appetite and interest from large institutions to buy Bitcoin, which in turn is going to positively benefit Ethereum, right? Inadvertently. So now that we have that clear, right? Bitcoin and ETH, of course, give way to the rest of the asset market, like Solana, Ethereum L2s or L3s. Other aspects of the market are, of course, going to benefit to some degree. I can't say that, if Solana is going to outperform Matic, or if Jito is going to outperform Solana, or if AVAX is going to outperform Near protocol. Like, these things are very, they're going to be very dependent on the fundamentals of the individual business and the project. depending on what new strategy they have, what products they're going to put out, how they're going to attract users, how they're going to attract money, that will be very project dependent and path dependent on what the people and the teams do internally over the next coming months. Okay. So we won't do what is going to do best in the performance wise, other than the fact that generally looking at the market, I would say Ethereum is going to do relatively well. Solana, quite possibly in terms of upside potential, simply because Solana is a smaller market cap asset. Like Ethereum is a $350 billion giant. Solana is 63 billion. Still big, but not, this is 5 times bigger, right? A little bit more than 5 times, I think. So that's a pretty large asset, Ethereum. And Ethereum to move, let's just say a 4x is much more difficult, in my opinion, versus Solana to move at a 4x. Ethereum to move to 2.5x, I think is possible. Solana to move at a 5x is equally possible. So that's kind of how I look at, general comparisons of the market. Okay. And again, I specifically picked Solana because Solana, hate it or love it. I mean, it has incredible user activity, a very, very solid chain, a robust chain, been tested through the bear market. I've had my frustrations with Solana here and there, but there's no way you can hate on Solana because it is a tried and tested chain. It's the de facto chain, in my opinion, now going forward of the average retail user, which is quite substantial, in my opinion. A lot of good things about Solana, such as performance, speed, transaction costs, and many other products, as well as meme coins deploying on Solana, all give it the allure of the go-to retail chain, right? So for the most part, let's just say from here to the upside, if we're putting up like 3x or 4x, we're talking about a $600 Solana, right? Okay, so we've now gotten a couple of upside targets in some of these assets, right? Let's clear that up and let's move on to the bear case now. Okay, so we've done the bull. Now let's move on to the bear. All right. If you don't want to watch the rest of this video and ruin your mood, you could turn it off right now and you could say, hey, you know what? I'm just going to focus on the bull case. And I don't need to worry about the bear. But if you have cash on the sidelines, if you're looking for, putting on more risk, if you're looking to buy into positions, if you are thinking about somehow structuring your trade with whether it be call options or hedge or managing risk or further putting on leverage at a later point, if and when prices drop, then the next part of the video is useful for you, right? Because the next part of the video talks about some of the risks that are developing on the horizon. Okay. Some of the risks developing on the horizon are, in fact, things like, let's just say, for example, coin, which is already a large institutional asset, right? Kind of like the Bitcoin ETFs, showing us that we're already in the midst of a pullback. Okay. In the midst of a pullback, how deep could we go? Do we go back to the yearly pivot, which is around 130? Maybe, but that's a little bit too deep, right? How much further could we go back? Well, I think this trend line right here could say something, right? This trend line right here could give us support somewhere around the 180s. Okay. So the 180 level is also a pretty substantial level because this is the prior area where we had a resistance breakout. Then maybe we come back to test the same area as support. And then we take off sometime in July or August or later this year. I actually recently just did a fundamental deep dive into coin. I do a lot of research into public equity stocks. And one thing that I talked about today itself, or yesterday rather, was Coinbase as a business, right? I think Coinbase is an incredible business. And again, this is not financial advice. This is just my research of what I believe is an asset that is incredibly valuable, growing at a pretty fast pace, a very well-run business, strong operating leverage, strong drivers for growth, both on the bottom line as well as user activity, revenue growth, profit margin, et cetera, right? So all in all, I think Coinbase is a pretty solid steal, even at $200. In the same way, if you believe that BTC is going to 100K, it doesn't really matter a whole lot if you buy at 60 or 50 if you're aiming for 100, right? The returns from 50 or 60 are negligible, right? Up to 100. But if you were buying at 70 or 74 and then aiming for 100, now that's a different story, right? Or if you're waiting for a pullback to 50 and aiming for 100, now that's a pretty substantial, risk to reward trade, right? So this is why when we look at opportunities in the market, we often look at them in context of risk to reward, trade setup, right? Trade or investment, however you want to, that's just semantics, right? Like, I'm not trying to say that if you're a trader, you have to look at this, from a risk to reward perspective. It has to be, structured a certain way with a certain R level. Not really. What I'm saying is, whether you want to call it a trade or investment, it's almost always better when the upside is 100% versus, let's just say, 50% or 40%, right? That's just obvious. So what we'll talk about is that this level, this trading range that we're in, and this level that we're sitting at 61,000, in my opinion, from most viewpoints and angles, this level is cracking. There's, really not many other ways to put it. Now, in my bull case, I highlighted that it's hard to break and it's not broken yet, right? But I'm going to apply that same logic here and say, yeah, it's hard to break, but not broken yet. But you can only hammer a certain level so many times, once, twice, 3 times, 4 times, 5 times. You can only hammer this level so many times before it eventually cracks, right? And once it cracks, okay, here's the general view of how we measure pullbacks. So usually I'll just say, let's just take the high and the low of the range. And once that level breaks, I just take that measured move all the way down and say, what is the range low? And once the range low breaks, measure the entire range and then, drop that down the same amount, right? So from here, hang on. So let's just say from here to here, that's about, let's just say $12,700 range, right? And again, I like to put that in dollar terms, like actual quantity terms rather than percentages. So what I'm going to do is I'm going to go back here and we'll say $12,600. So that puts it at a 20% pullback if this range breaks, the range of 61K. That means price should be getting somewhere around $48,000. I think 48 is a pretty reasonable area, right? Why? Because you also have this little order block that helped propel us higher, which means generally if this range breaks, the first area price will revisit is a previous area that sent us up, okay? Because these are the buyers who absorbed the sellers, right? And were able to overpower them, and that sent us here. So it's those same buyers who will be forced to step up and defend their position in this area. Sure, you may nuke right through it, and maybe, you just get a deep wick because of liquidations or exogenous events like, I don't know, some small outbreak of a war, or oil prices are ripping up higher, or there's some, random external event happening in the world and Bitcoin just gets a shock, right? Shocks don't really change the fundamental value of BTC. What shocks do is change the temporary value of a portfolio construction for retail investors or institutional investors temporarily. Meaning, if I have, let's just say, in a $1 million portfolio, 25% Bitcoin and 75% stocks, and there's some event happening in the world that is forcing stocks down, like Jay Powell says, hey, there's going to be higher interest rates, or Jay Powell says that unemployment is ticking up and we may be coming for a recession, or there's more issues with Israel and Palestine and the war escalates. What is the first thing that gets sold? It's not stocks, it's Bitcoin, right? Bitcoin is a high beta, high risk asset. So Bitcoin gets sold first, which means almost everybody is trying to, get out of a door. And that door is not getting bigger. The door is the same size, but the crowd is really, really, trying to force through that door. And that creates cascading liquidations and forces price beyond certain levels that we would generally be looking at. So instead of 50K, price may just drop spontaneously to 44K, but for the most part, price will hold above the 50K level because that's a very important level, right? So that is one area that I want you guys to pay attention to, which is the 48K, 45K level. Another way to look at it is Bitcoin over the last 1 year or so has had about 1, 2, and 3 20% pullbacks, 22, 22, and 20, approximately 22 again, right? If you look back in the 2017 bull market, Bitcoin had at least 2 approximate 40% pullbacks. In fact, I think it might be 3. No, this one is only 34%. But 34 right here, 39 right here. Oh, sorry. Where am I again? Yeah. 39 right here. No, 40 right here, and sorry, 39 right here. Okay, so 39, 40, and 34. Right? So now again, you can make the argument and say that we're not going to get 40% pullbacks because there's institutions involved and Bitcoin is a stronger asset class and this and that and this and that, right? The reality is that Bitcoin does thrive off of a high volatility, user base, right? It is generally still a largely emotion, retail-driven asset, which means that it is very susceptible to large pullbacks. Maybe not multiple times in a year, but minimum, once a year, you do get some pretty sharp shakeouts. Even in the bull market in 2021, this was a 31% pullback, and this was almost a 55% pullback, right? So from here, if we say we're going to get, I don't know, I should say a 40% pullback, that puts us somewhere around $44,000. Are there other things that can give us an insight of where we can land? Sure. Volume profile, right? Volume profile is a pretty important indicator that gives us an idea of where has a decent amount of volume taken place, where buyers and sellers have transacted and agree that this is a fair value level. Well, I think a fair value level with a high VPVR shelf is somewhere around here. This is the next shelf on VPVR that denotes that based on this previous history of price action, this level is where buyers and sellers will step up and transact at very, very high levels in dollar amounts. And that level is somewhere around $46,000, $47,000. So we're getting close, right? Based on the averages of the 2017 pullback, as well as the 2021 pullback, if we do have, let's just say, a high percentage pullback, paying attention to 48 as the first level, and then of course 44 and 47 as the next big levels, those are the areas that you probably want to be watching if the price does pull back. Now, could we make an argument and say, oh, well, price has to go to 30K or 20K? I think that's where things get a little bit more unreasonable, right? I think for that to happen, that would effectively mean, first of all, the bull market has ended, right? And if the bull market has ended, you're not going to see that right away. What you'll see is pull back like this. We'll definitely go to 45, 50K, and then we'll keep grinding out probably for like, shoot, I would probably say, a good year or two. And that's how it'll break. Then we'll go back to 29, 30K. So it won't happen within like a few weeks or a few months. I think it'll take a much longer time. It'll probably be something like this if the current bull market has ended. And this took place over a span of almost 1 year. This big, big choppy range. And of course, this was the COVID drop, right? But I don't think we're in that kind of regime. I think we are in a bull market, and I'm going to assume that we're in a bull market until I'm proven wrong, meaning price has to do this first, or maybe it bounces from here, right? I'm not saying it has to come here. It could turn at any point. It can even turn from here. Okay, but the point is that once it does turn, whether it be from here, from lower, or much lower, however it does turn, you still need to have some catalysts to send price higher. You still need to see buyers actually step up to the plate and push prices higher. So of course, we'll have to wait on that also, right? And what about other assets? Okay, let's get to the main stage, right? So this is where I'm going to discuss, aside from BTC being the one big asset that I generally pay attention to, because if we get that kind of pullback, like, if we get a pullback to 48K or 44K, I'm going to back up the truck and I'm going to buy a lot of BTC, probably on a little bit of leverage. Again, not investment advice. Don't follow me. Not telling you to buy or sell. This is just what I will be doing, right? I probably pick up some BTC on leverage, not high leverage, just something that I can, hang on to without putting my own money at risk on lower leverage, and using that leverage for more upside as BTC goes to 80, 90, 100K, right? If I get that 48 or 44K level. Solana, I believe the same thing. However, I'm not going to put on levered positions on Solana other than trades, because Solana is much more volatile than BTC, right? It can drop from here. In my opinion, I think Solana can easily get to about $85, $80. Another reason why is because we have a pretty important pivot level right around the $80 mark. Okay, so I think like $80, $85 is a pretty substantial pullback on Solana. That would be from the high to, let's just say, like $85, right? That's about a 60% pullback. 60% pullback on Solana is quite substantial. I don't think we need to discuss that, oh, well, Solana has to go down, 80 or 90%. Like, that's not really a necessary conversation. Again, if things are truly wrong and the bull market has ended. But if that's the case, like we're not going to know for another 3 to 6 months, right? So let's just assume for now that the bull market is intact and that price could break its way down. Okay, something like this. And then we shoot higher. Let's just put this somewhere here, right? Put this here. Okay. So this is my general kind of consensus view of how I believe things may start panning out in Seoul. Okay, I think it'll be kind of like this, something like that. All right. Other assets. I've spoken about, things that I'm impressed by. For example, I like the fact that Near is positioning itself as the AI, L1 chain or ecosystem. I like the fact that there's another one over here. Arweave is trying to position itself as not only like a decentralized storage, but also AI storage related solutions, AI, products, product suite that's coming out. So Arweave is another one, right? How deep it pulls back, I have no idea, right? In crypto, I feel like we often think that you have to get like 60 or 80% pullbacks. That's not really necessary. I mean, for a lot of people, like, if you believe in these assets, even a 30% pullback or 25% pullback is good, because if the upside is, 2x, even from like the point at which you get a 25% pullback, that's pretty good, right? So I wouldn't wait for like the world to end for you to think that you have to buy them. And most of you really won't, right? I mean, even me, I would be very paranoid if, Jay Powell says like he has to hike rates or there's a war outbreak or whatever. Like, yeah, of course, we'd all be scared. It's natural. But the reality is that, again, those things have not happened. And assuming that, we're in a potential bull market is also probably something that we need to be watching and paying attention to. So Arweave, Near, Numeraire, again, AI related products, right? These are products that you generally want to be focusing on. And if you kind of believe that, like, hey, these products are stuck in a range, whether you get a pullback to mid range or low of the range, these might be gifts for a lot of people. And they'd be like a good gift for the foreseeable future, like a good 3 to 6 month future, that is, By the way, as I speak, I see BTC popping up a little bit. And I will say on a small time frame basis, BTC has a lot to prove. I think, this area is going to be capped for a while. I feel like, unless somehow Bitcoin just starts ripping through everything, that's a different story. But for the most part, like I'm going to stay under the assumption that we're in a downtrend, right? Or a local downtrend. Like this is not a heavy downtrend, but a downtrend nonetheless. And with that being said, whether it's Numeraire or Arweave or Ethereum, Solana, all these assets, they need to prove themselves that they are ready to bottom out and push for the next leg higher. I'm not convinced fully that that's the signal that they're giving. I'm not fully convinced, but I'm also not going to fight it. Like if Ethereum starts moving to 32, 3,300 and Bitcoin starts, slowly grinding up and starts doing this for the next few weeks, like I'm not going to fight that. I'm not going to short it. And first of all, in bull markets, I don't think it's worth it to short. It's just, you're not even going to be able to go to sleep at night properly, So I see no reason in that, which is the short, right? If you want to short because you're heavily long or you need to hedge some risk, because you're not prepared for a scenario where price nukes like 40K, If that's the case, then I understand why shorting is necessary for you, but that's just not the case for me. So I'm not really concerned if price even does nuke to 40K or 50K because I don't really have levered positions right now that I need to be concerned with. Okay. The other chart that looks kind of bleak is the let me see, ETH BTC, sorry. This one right here, right? ETH BTC is also one where I'm definitely concerned. I gotta say I'm extremely concerned because I don't know like how to sort of look at this chart and say, oh yeah, Ethereum has to rip up from here. Well, in fact, it really doesn't. It's probably got a longer way to go for pullback all the way to like 0.037. This is the previous level where price has maintained a pretty good SR level. Like if you kind of look at this area right here, support, breaks through resistance, resistance, breaks down resistance, resistance, pulls back, and then rips up. I would figure we pull back to that same level, maybe sometime in the next few weeks, right? And if that's the case, that's a 20% drop in the ETH BTC ratio itself, right? If that's the case, I think Ethereum is going back to, about 2,500 minimum, right? Which makes sense. Like if Bitcoin is at, if Bitcoin pulls back to like 50K, all right, 50,000 multiplied by that 0.037 ratio. Let me see what that is. 50,000 times 0.0375. How much is that? Oh, $2,000. Well, shit. Well, that's not good. Right, that doesn't really make sense. Again, I'm using this number based on the ratio that we saw earlier of the ETH BTC chart, right? So yeah, we don't really want that to happen. That would be kind of like a very big jolt on the crypto market at large if that does happen. So we'll see. Again, it's possible that maybe we're bottoming out right now and we don't really even know it yet. So I hold all opinions to equal value right now of upside and downside. All right. So we talked about Numeraire. I think Numeraire is a pretty incredible project, by the way. I just want to give you all some fundamentals. Like this is a AI based, open source hedge fund. I think that's an incredible model in a business to kind of think about. What they've effectively done is, they've allowed data scientists and people from all over the world who are market participants or Wall Street people or non-Wall Street people to basically use this token Numeraire to stake and create their own quant models to basically, show how they can perform in the stock market. And I think that's really, really cool. Like it's a very unique way of approaching AI, which is that, have everybody create these different models and see which models perform, and you stake your Numeraire based on that, and you get rewarded, I think, in Numeraire tokens. I think that's a really, really cool way to develop an AI project. And by the way, it's got like huge backers. Numeraire is a project that has been spoken about by even the likes of Paul Tudor Jones. This is way back in 2021. One of the co-founders of Renaissance is one of the largest funds Jim Simons started, and Howard Morgan was also on in Renaissance, and he spoke about Numeraire, as a pretty incredible product, right? So you have a lot of like really, really smart people talking about it or have talked about it. And I think it's a really, really cool way of approaching the AI space. I'm incredibly bullish on AI, first of all, especially because what we have in this, coming few weeks is NVIDIA earnings, right? And of course, NVIDIA is going to continuously talk about AI. This is, in my opinion, the year for AI. 2024 is the year for AI. So, of course, I'm going to focus more of my attention on AI projects. It only makes sense. There is, of course, the other focus in markets, which is probably things like RWAs, or you could call them DPINs, render, you know, um, Hive Mapper, Honey Token, Helium, Filecoin. Like these are all related to the DPIN RWA narrative, right? And those have a lot of backing as well as real products being built. Ondo Finance, by the way, is also a really incredible product. I think they're basically trying to bring on treasuries and bonds to be tradable assets via Ondo, right? So there's a lot of cool stuff. That's all I'm gonna say in the market. But my top picks are, of course, Solana, Numeraire, and my truly overweight position favorite that I'm going to probably bet really, really big on for this cycle, which is Degen. I'm already sort of heavy spot long in Degen, but I have cash on the side to be able to add some more in the Degen position. My large thesis of Degen being, incredibly bullish, I've explained it numerous times, and I don't want to kind of go over it again and again. Let me see if I've saved that thread, but things like Degen listing on Coinbase, not even done yet. More bridges to be built between L2s and Degen. I think that'll help a lot. I think once the ETH mainnet whales are able to come to Degen, that'll be huge. SocialFi is pretty massive on Degen itself. And I think that's a huge thing. Like I've spoken about, Dracula, for example. This is the largest, if I'm not mistaken, this is the largest like SocialFi app on Ethereum. I guess I don't really know if that's true. I take that back because technically SocialFi could be like FriendTech and Fantasy Top, and both are technically on Ethereum. But this is a pretty unique app because this is kind of like your Instagram Reels or whatever, right? So I think it's really cool app that's been created, and this is basically utilizing Degen token, and I think it sits on base chain, right? So SocialFi, I think, is going to be a huge thing. And of course, you have a pretty bubbling ecosystem, and Warpcast itself takes Degen tips. Like I've spoken about this many times, I often get Degen tips like this, and I love it. Like I just put out content, or I get, rewards for being active on Warpcast or Degen ecosystem. I get rewards in Degen for just posting stuff, knowledge, articles, facts, information, or making videos like this. And I think that's really cool, right? So Degen as a token is an extremely connected ecosystem token, more so than I've ever seen in terms of just pure distribution. I've never really seen anything like Degen. So in my opinion, Degen is extremely undervalued. In fact, I would go as far as to say that it is extremely undervalued. And let me see. All these L2s, like, where the hell is it? Categories, where's categories here? Like if you look at all the different layer twos, I see no reason why a L3, which is what Degen is, right? A layer 3 protocol should sit here at the top in terms of market cap. Polygon, Mantle, Immutable. I mean, these are, these are not really ecosystems that most people even care about now, right? Like Metis, Manta, they're very scattered, bifurcated ecosystems where I don't believe that there's any sort of large user activity or excitement. But Degen, however, there is. There's this entire new world of Web3 being built, connecting Degen with Warpcast, um, having a bunch of different meme coins and NFT projects and SocialFi like Dracula and Jam.so and many other things. If you're familiar with Degen, you'll realize like there's a huge ecosystem being built. And I think it's extremely undervalued. I think it should sit somewhere here. So my general bet on Degen is Degen should be somewhere around 10 to 20 billion dollars. That's just what I feel. That's my opinion. Again, not financial advice, not telling you to buy, but I'm telling you, I'm backing up the truck on Degen. I also think that Degen has its capability of bottoming first before the rest of the market possibly bottoms. You know, um, so yeah, that's my general outlook on the market. I think we do have a high possibility of this summer up until May and June being a little bit choppy, a little bit tough for markets to, really push and break out of. But I also see the second half of this year, which is, let's just say after June, being quite bullish. I see no reason why after June, up until December. So basically, like, we can make the argument that um, the next few weeks will be kind of like this, where you have, I don't know, another pullback, sideways, chop, chop. Okay, so let's put it like that. And then you have a bigger leg, kind of like this, all the way up into December and January of 2025, like that. I think that's possible. Okay. So anyway, that's it. I know this was a long analysis, but I wanted to go through it because I find it very important and timely that we watch certain things in the market and you're prepared. You're not surprised and shocked by what happens in the coming few days or coming few weeks. Because I do believe that whatever happens, I don't think it's going to be a quiet period at all. I think we are due for some volatility in the market. And I think BTC, whether it be up or down, whether it creates a base and shoots up higher or pulls back further, one should almost always be prepared for, the outlier situations or situations that you just generally had not thought of to be able to, better capitalize moments like that. Right. All right. That's it. Good luck, everybody. Take care. I know this was a long, long analysis, so thank you for bearing with me. Take care. If you have any questions, find me on Warpcast. This is where I spend a majority of my time. Nowadays, I post a lot of alpha, like whatever I can, I literally just post here. So anyway, if you have any questions, want me to add some clarity, let me know. Good luck. Take care. Cheers.